Hello, this is Joe Pryor, the virtual real estate team in Oklahoma City, and I just did a video talking about the Fed going up 25 basis points, the real estate market, the mortgage market already dialing in an 1/8 of a point increase to kind of go along with it. And yeah, we're having some pretty high rates that we haven't seen for a decade. And it's affecting real estate returns for investors. But I want to kind of talk about something about negative cash flow. And what I said in the previous video is I'd rather see you get positive cash flow and appreciation. I mean, that's a total bonus. But just because you've got a little bit of negative cash flow doesn't necessarily mean that you're losing any kind of money. And I'm going to kind of make an analogy here. I'm going to kind of say, play a little game with you. What if I told you that for an $8,400 investment, just $100 on, and just $100 a month for 7 years. That's all you got to put in is $100 a month for 7 years. And at the end of 7 years, you have at least a net increase of $100,000 for that $8,400. And the other thing is that you're investing in something where the risk is very low. This is not some new company that's a startup with VC money and we don't know if it's going to go anywhere. But if that was a stock that was a safe investment, and I went to you and said, look, I'm going to give you the lowest risk you can possibly do, and for $100 a month for 7 years, I'm going to make you over $100,000. That's exactly what I'm talking about, that negative cash flow doesn't impact you in the ability of creating wealth in real estate because of the miracle of compound interest, which I've talked about a lot. In other words, if I buy a property and I use a reasonable amount of appreciation in a market like Oklahoma City or Tulsa, which is what is called a linear market. In other words, it's not like, California, Florida, where things go wildly up and down, or it's not like Indianapolis that looks like a sawtooth, basically because things are constantly fluctuating, but it's more like that. And we use 5% and it compounds every year. That's what it means to hold that property for 7 years. And I can be happy to send you a chart to show you exactly what this looks like on paper, because it's going to give you, depending on the purchase price, at least $100,000 or more in a net increase if you sell that property. And with a 1031 tax-deferred exchange, you don't have to pay taxes on that money as long as you reinvest it in real estate. So what I'm trying to say is, if you're on a knife edge in terms of your income versus your expenses, this is not going to make sense to you. It's not going to be something that I would recommend you do. Don't lose $100 a month. But I deal with a lot of people that make $300,000, $400,000, $600,000 a year in the tech industry in California, for instance. And something, $100 a month, that's like going to Starbucks every day. And paying $6 to $8 at Starbucks. And I know people that do that, and rather than do that, invest in real estate, invest in your future, invest in something that's going to make you a lot of money and is a very, very safe investment. So I'm not saying $500 a month is worth your time, in terms of a loss. But if we have a little bit of a loss and a consistent appreciation of just 5% in 7 years, you're going to be in fantastic shape. In 10 years, if you hold it, it's going to be even better. Don't be afraid of negative cash flow if it's just a little. Let me show you how you can make a lot of money investing in really good, affordable real estate in the Oklahoma market.